There we go. Hello, everyone. My name is Anne Armitage, and I am joined by Brian Knight, who is one of our live traders. And today, Brian is going to share with you a little bit of his knowledge, his vast knowledge, actually, about one of our trading strategies. But first, let's get to know Brian a little bit. So, Brian, how long have you been with the Ninjas?
Oh gosh, it's over 4 years now, trading within the Ninjas. So it's been a progression over those 4 years. 4 years plus. It's amazing. The time has gone.
The time just goes, doesn't it?
Well, when you're learning and compounding and adding your knowledge as you go along, it's amazing. Yeah.
So what makes you stay?
Community. The community, the people like Anne, people like the support that is within this community is what I haven't found anywhere else, online or even out in the world when I was, running businesses as well. So that's why I'm here.
Yeah, there's a lot of good things about it. And specifically, like in your mind, what do you think is one of the most important things about our community?
I think that there's an energy about the group. There's a synergy that occurs, that one person sees something and wants to share it with everyone else. There is a lack of competitiveness. And that might sound weird, but to me, that's fantastic. That people go, hey, I like this and I'm doing really well. I want to share this with everyone else and see if it suits them or not. That's what excites me about this community. Yeah, absolutely.
Totally agree. Well, maybe we should just move right into your demonstration here. I'll let you go for it.
Sure. Look, the one thing is, in this, I would endeavor to keep this as basic, simple and simplistic. The KISS, keep it simple and simplistic is the thing. There are some concepts in this though that I really can't go over because there are many components to it. Yet I suppose what I want to demonstrate is the advantages that this one strategy that I'm going to show you, and we have several within the group, and you'll get to see that through other trainers as well. But this one I just want to show you. So let me go over.
Did we tell them what this one is called? I don't know if we did.
Oh, okay. I'll go through. Can you see my Trading View screen? Okay. Yes. So this is a thing called Trading View, and it's the tool that we use to do all of our analysis and all of that sort of lovely stuff to see whether we have a great trade to take or not. Right? You can take any trade. Anybody can take any trade. But you don't have any sort of guarantee that it's going to do what you plan it to do. So it needs to be an assessment process where you can assess great trades that have high percentages of success. That's what it's about. So, and this is a strategy, it's called bankers or snipers or institutional or smart money, or it's got lots of different names. But basically, I just want people to realize that the whole Forex market, well, other markets too, but the market is totally manipulated. Totally manipulated. The institutions and the banks with lots of money manipulate the whole system. So
because they are the key players.
Absolutely, they're the big players in it. So if we want to be able to take advantage of that, we need to think like they think, and we need to look at the fingerprints that they leave on the charts to what they are planning on doing. Yeah, and then we just grab onto the coattail and just get dragged along with it, gaining pips, and gaining profits. That's really what this strategy is about. So let me just show you a bigger picture. So I'm now on the 1 hour chart. And look, you'll see all these different things on here, but I'll explain a little bit of that in the moment. Let me just take you here. If you look back here, and it's even further, but back here in February 21, right? A while ago, this pair just kept going up and up and up and up, right? So if you want to, if we wanted to measure this, for example, little measuring tool, if we want to measure from here up to there, that's like nearly 500 pips, 488. Let's call it 500 between friends. Okay.
Considerable amount.
It came back down again. It was only 300, but it went back up to this high, and it's 586 between friends, nearly 600 pips. But that was over 44 days. Now, would you be in a trade for 44 days? Probably not, maybe not. It depends on what type of trader you are. So what happens is, what the banks do is they push up, pull it back down to a point, push up, pull it back down, and push back up again. Or they do the other direction, where they'll push up to a high point, they'll come back down, push back up, not quite to that high point, and then drop down. Come back again, and then drop down. Come back again, and drop down. So if we look at this, if you can see it, it's done this lovely move up to this highest point, and now it's working its back, way back down to this lower point. All right? Now, if we look to the left, there is a possibility that this may go further down to sort of, to this level, through this level over here. So there's a considerable, if I was to measure that, one of my alerts, if I was to measure where it currently is down to maybe there, that's, close to 200 pips there. Now, I'm not saying that's what it's going to do, but the point is it has been doing that for a while. So that peak there was on the 1st of April, right? So for a month, it's just been fallen down, right? So the trend, and so this strategy is very much about a trend, uptrend. Now we have a downtrend, okay? And following that trend. So let's get into this a little bit closer. And if I can, so there's lots of things on this chart, but we'll just, don't worry too much about it, as in lines. Oh gosh, how do I'll put this over here. Sorry, I just got to maneuver this a little bit. Now, because I'm on the 1 hour, this may not make a lot of sense here. And I'll show you what happens is, see this nice drop here? I've got some different colors. I might just turn that off for a minute. We've got a really big drop down here. And you can see where it's come from. Oop, where is it?
Way
up here.
there. Yep.
Drop, 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 drop. And then it's pushed up. And then it's gone drop, 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 drop again, right? That's typically a banker's type move, right? Where they drop it, pull it back up to a certain point, drop, pull it back to a certain point, then drop again. And they can do this in reverse. So when we were looking over here, what they do is they pull it down, back up, back to this point, and then off they take it off again. So it just, remember I said fingerprint? This is the bank's fingerprint of how they do things, right? So let's now go over to here. So now I'm on this sell trend, trending down. So this is where I've sort of said, this is now going down. And I've got this sort of risk to reward thing here. So if you're risking stuff. So, and this doesn't make a lot of sense with things, but this point of view where I've got it, where it's coming back up and I've been tracking it. I'm just sort of like, Anne knows, but my favorite term is I love to trap. I set traps and I wait for them to go off. So what happens is this went up, 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 up. I found a high point. It came back down and then it came back into what's called a zone. And this is what the banks do. They pull a high point, they pull down, trying to fool people. They pull it back into a zone and then take it in the direction that they want. Okay. And there's lots of things about this. There's mitigation. There's like lots of crazy words that get
lots of words that sound very intimidating.
But basically what the banks are doing is they're using their money to take it in the direction they want to profit.
Yeah.
Now, if we look at this and say, okay, if I got into the trade there, right at this point, which it went into that zone, and I had my stop loss up there, which is a term, like if it went up there, I would lose 1% of my account. Whoop-de-doo, right? Yep. But if I risk 1%, and that's a 9 pip stop loss, okay? And then I just followed that down because it kept going down. And if I looked, well, you know, it actually went further because I haven't updated this. But let's just, oh, hang on, I'll change this. I'll put this down to maybe just there, right? Say, for example, I got in there and I saw it come down back up and went to there, and I got out of the trade wherever, just there. That's 109 pips, and that's a 12% return. So I've risked 1% and I've gained 12%. Now that 1% I haven't even lost. It's a risk only if it came up to that point, and it never came up to that point at any time. There's 12%. So I just want you to add these up as we go along. But the point is, I could be in this trade, whoops, I could be in that one single trade for a lot longer because I know the trend's going down. So I could actually be in it. Oh, gosh. I could be in it till it actually is right now where the price is now. And if I go and look back, that's now 32% increase. But, you know, you have to be in the trade for a period of time. That's each one of those, in between each one of those blue vertical lines is a day. So that's quite a few days, but it's not out of, you know, but I could be just 12%. It really doesn't matter. All right. Then here's another opportunity. Let me show you. So as it comes down, the banks sort of play around again. And as they're going down, they push it back up again. Right. They push it back up, down, back into the zone. And then off it went and down it went again. So here's, I'm risking 14 pips maybe. And where if it goes down to here, I've got, what's that, Anne? What does that say?
That says 7.2.
So I risk 1% again, and I can gain 7%. So, you know, let's be conservative. I'll just put this one way back up here. There we go. And we'll just add this up as we go along. Say it's only to there. So what's that percentage return? 12%? Let's say 12 and 7. How much does that add up to?
No, so far we're at 19.
Good. That's 19% over 1, 2, 3, 4, 5, 6, maybe 7 days. All right. 19%. Would you, let's be between friends. Let's say we've made 20%. 20%, and you risked 2% of your account. 2, and you've made 20%. Not too bad in 7 days.
Not too bad.
Okay? Not shabby. So you're in that trade to there and you get out. You could have actually taken that trade further down to there, which means you could have nearly 10%. But let's just be conservative and say we're only, you know, 7 or whatever. Okay. Then, so there's 2, 20% and whatever. Now, there's another one here, but we don't need to worry too much. Well, I can. Let me show you. If we just put this on here, we go back down here. It's come back from the zone, but it's stopped out. Say we lost 1%, right? That could be a loss there. But who cares? I'm only losing 1%, but it didn't go further, right? What I'm doing now is I'm looking at this. It's down here. I'm looking at it to come back into this zone before it drops back off. So I could get pips on the way back up, and then I'm looking at it coming back down here. So this is a trade in motion at the moment. So let's put this on. Say, for example, I was to get into the trade there. I have a stop loss up there. Say it's 20, 30 pips. I may make that shorter when I get to see. If that comes back down, oh, what am I doing there? What happened there? 98. That can't be right. Something's not right there. Oh, maybe.
Do you have the right? Are you talking about on the buy?
Oh, it's the wrong way. What am I doing?
Yeah.
I'm crazy.
You got it for a long right now.
I am a crazy person. So let's say for short, yeah. Yeah, I need to have my stop loss up here.
There you go.
Stop loss up there for 20 or whatever, and we come down, and it'll probably go down past, because when it comes back, it normally goes down past. So that's another 3 or 4, and it could go even further. So my assessment would be probably about here. So it's about 4 or 5 to 1. So if this one happens, I'm not saying it will, but if it does, which it's more likely to, and it could go further, but we've got like 19 plus another 4, like 5, 20, 25%. This is what bankers is about. And also too, the beauty of this, Anne, is you only have to sort of look at it a couple of times a day, like in the morning, maybe the evening, maybe in the middle of the day if you have a break or whatever. And you can place orders on this. So if you're asleep, it could actually activate, get you in the trade, and even profit out before you wake up. There is a possibility of that, which I've had. So
all these are great advantages for longer term trades.
Absolutely. So let's look at this as in the risk that you are placing in these trades and the overall rewards that you could get from it. Okay. So you can see there's 3 trades that I've taken here. One of them, I lost 1%. Okay. And 2 of them together combined, being really conservative is about 19% profit. So basically that means I've made about 18% in about 7 days. Like it's not a big deal. Okay. So this is another trade possibility coming in here now, and I'll just wait. It's just patience to sit here, wait for what's going to happen with it and let it sort of go into that, into that zone. If it does, if it doesn't, if it keeps going, like if this keeps going down as a price, all I do is I just keep following that down, waiting for it to go back up again. Yeah. And if it doesn't do that, so what? I'm not in a trade. I haven't risked anything. I just go to another pair or wait for another setup. Yet banks love to do this sort of stuff. Push, pull back up, push down, particularly if it's in this trend. Yeah. Anyway, that's the basic overview. Have you got any questions, Anne, that you want to ask about it?
I'm without getting too complicated, because the strategy does have some aspects that are a little more on the advanced side. So I'm going to say no.
Yeah.
But
I think one of the things though, Anne, that you may want to ask, but I want to mention, is where do I get these pairs from?
That is a good question. Yeah, where do you know which ones to look at?
Yeah, so we have a tool. Oh, we'll open up. Yeah, we have a tool called the Harmonic Scanner. And so normally I go on the 1 hours and I go to a certain broker. Oh, hang on a minute. I have to refresh because that page is, there we go.
Yeah, there you go.
Okay, I'll just, hang on, I've got to redo this so that, there we go. I just want to show you this. This is part of the Ninja Group. We are members also of IM Academy. You have to be part of the Ninjas as well. And so this is one of this is the basic tool. This is
our one tool, really.
Yeah, that we use. We have lots of others that, like, hey.
But this is the one we like to use.
Yeah.
And this is the one that we use for our strategies. So all the strategies that we do teach in our community all basically hinge on this particular tool.
So remember, I was playing around with USD CHF on that bankers. So that came from a scan that was here. Now that scan now is pretty old, but the point is that scan has been there and is still valid. So let me look at this. For example, I can go through any of these. Here is a Euro JPY scan. Tells me where to look. AUD NZD as another scan. AUD CAD, another one, right? GBP USD, another one. Euro USD, another one. So there's multiple. What's this one? AUD JPY was one I think I was looking at. Yeah, look at this. It's come off this D point. It's gone way up here. How many pips have we got in here? That's nearly 200 pips, right? In this, of course, it does little pullbacks. I want to show you something. See how it's come off this D point, up, back to a zone, and then taken off? Yep. What do you think that is? That's a very typical banker's move there, to move it 200 pips. So we use this to be able to get to this, to assess, and then bag the pips and the profits. That's what it's about. So absolutely, this strategy has a really good reward in relation to the risk that you need to put in a trade. And it is great for the lifestyle of a person who is busy, that only sort of has maybe morning, evening, or maybe a time through the day to have a look at what's happening.
Yeah, exactly. Okay.
So any other questions, Anne? That's it in a nutshell.
Yeah, I again, without getting too involved, I don't really think so. The banker strategy is very much worth looking at and learning, but it is often suited to someone who's already got a little bit of experience behind them. Some of the concepts are a little bit more challenging for a newer person, but that said, like Brian said, it's an ideal strategy for someone who has a very busy life, who doesn't have time to spend, in front of the computer more than they absolutely have to. So it works very well for that reason. A lot of people love it.
They're just my alerts going off if you heard that sound in the background, the ding ding. It's just like, go look at this one, go look at this. Yeah, and that comes from the Harmonic Scanner to go look and potential trades again. Yeah.
Yep.
All
absolutely.
Right. How does that seem, Anne?
I think we're good.
Okay, good, lovely. Well, thank you very much for spending the time to even look at this. If you're watching this video and someone's referred you to watch this, or even the whole series of these trainings, or
has invited you into our light group,
yeah, then please get back to that referrer, or get back to, if it's Anne, get back to her. If it's me, get back to me, whoever it is, so you can take advantage of this or any of the other options that we may have. And remember, you'll never find a community like it is here. It's fantastic.
Absolutely not.
All right. Thank you for your time, Anne.
Thank you, Brian.